The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to another edition of the Power Trading Hour with me, David White, your humble and lovable and squeezable host at TFNN.com, the headquarters for technical trading and investing. Today we celebrate this day in 1957. The machines at Wham-O Toy Company rolled out their first batch of aerodynamic plastic discs, now known to fanatical millions of fans all over the world as Frisbees. And of course, dogs go after them. People like to play with them. I don't think the people that invented them ever thought that it was going to be a toy for a dog. But kind of interesting. Very neat that dogs are so interested in jumping high and grabbing things, but probably goes to the primal needs of when they were wolves back there. But I guess for one of the toys that can give you lots of fun, pretty much unbreakable unless you really try to set out, cut the thing in half with a saw. Pretty good toy. I remember having several of them getting lost over neighbors' fences. Always a cool toy on the beach, in the park, at the dog park. Got to be one of the neatest things ever out there, though. Very simple, and what a great name, Wham-O Toys. But I think I had several of them, maybe 4 or 5 of them over time. Somebody in the den says their border collie eats them. When I was doing this, I noticed that there's special Frisbees for dogs that I saw today. And I didn't use that picture, but apparently there's special ones that your dog can't chew in half. But I always see a lot of them at the dog park chewed somewhat. And of course, it's the favorite thing to play keep away with. From one dog to another, they all want to possess something. But pretty cool toy out there. Now, in the markets today, what do we have? Came off with some absolutely huge moves in stocks after hours last night. They stayed within the 6%, for the most part, 6% move that the options were forecasting. So there weren't any great surprises to the upside or downside, with the exception of Coach this morning. We'll get into that a little bit. But what do we have in the market? The one thing you don't want to see is a few stocks basically holding the total market up about 1.5 points on the S&P cash. I don't put a lot of stock into how much the Dow moved because IBM's in it or some of these other stocks. And the NASDAQ, not all that strong either. Up about 9 points or 0.3%. Not the kind of move that you think that you would like to see in this market after blowout, what everybody's saying is blowout earnings in IBM. But we'll figure out why the market's rather tame. Part of it is that we're waiting for Apple earnings tonight. Still such a huge part of the both the S&P and NASDAQ and how it's going to move the markets tonight. Probably going to be very important, but we'll talk about that in a little bit. Probably get into some charts on it. What we do have is IBM coming out last night. There's a bullish and bearish camp. I have not been one of these ones thinking that IBM was going to blow out. It's ranged from about 184 to 210 is there. I suspect it's basically one of these engineered stocks. And what do I mean by that? 96% of all their free cash flow goes back into buying their stock. It is the bluest of the blue chips, and why it's heavily owned by people that never want to sell it. All they have to do to keep this thing slightly moving up is continue lowering the supply of the stock. And that's what they've been doing for several years out there, along with getting rid of huge amounts of U.S. employees and replacing them at 1/5 the cost in India. We've chronicled that on this show. So is the big move on this thing a big deal to me for a stock that's 90% institutionally owned? Not really. For all I know, they probably had a huge amount of shorts at the bell and sold the market short and covered them instantly to get this thing moving. A trick that is not unknown in the industry, and that is if you want to boost a stock but you don't want to own more of it later, you can do one or two things. You can buy the shares and sell them after hours, but of course that basically deflates the stock after hours. If you already have a big line, you go out and buy, 5, 10, 20,000, 100,000 shares of something like this at almost $200, and just go ahead and maybe you've been shorting it for a while, and you pretty much knew what IBM earnings are going to be. There's enough spin-off that most companies know, at least the big institutional traders know what companies like IBM, for the most part, earn. It's not like Apple, where the earnings are so intertwined with the individual products. It's pretty easy to tell what IBM does. Google, Apple, not so much. But IBM, am I impressed? It's a nice little bounce out of here, but am I impressed? No. Still a 90% institutionally owned stock and heavily engineered by those who hold it. Not a big deal. I don't really care to own it. It's going to probably languish in this 180 to 210 range for quite a while. But what is it trading out at? It was 206 last time I looked. Let's see. 205.45. It's been as high as 208.58. Not a whole lot to really say about it. Again, people own it, not going to sell it. They're going to continue taking whatever dividends they give. But, of course, that's modified by them just continuing to buy out shares. And if you look at the upward track of the company, it is all about buying back shares over the last 2-3 years. A lot of companies are trying to do similar things, so we'll have to see how that works out. But eventually, or inevitably, it will come to an end. You can only buy back so many shares and have people not start selling them. So you're basically an endless loop of buying shares that the underlying companies that own them, and by companies I mean funds, and continue to spin it off. So most of this is engineered. There's not a lot of great movement in the company. Is it a bad company that I want to short? No. Is it stock price engineered extensively? And the answer is yes. So I'm not really saying that when I looked at the earnings that they were anything out of the ordinary. They were not bad. So that you pop $10 or so, not a big deal out here. There's other stocks, seeing a lot of them that are popping that look like kind of blow-off tops, a lot of volume. I've been adding shares the last 2 days, added a position yesterday, or 2 positions yesterday, one today in the short side of the market. And doing okay so far. We'll be looking at the numbers after hours tonight in Apple. Probably going to tell us whether or not this market's going to break out or not. And to take 1 day of risk with some non-Apple derivant that's actually got some very weak stocks out there that probably pretty much at their zenith anyway. Probably the easiest way. I actually was looking at some stocks that we're going to get to later, and in the $100 range to buy puts on. And I think the idea that these things are going to go down pretty good, but I couldn't find a lot of puts out there on stocks that were incredibly weak at decent prices just yet. So I've got one from yesterday, 1 put position and 2 equity positions short, and so far so good. Anyway, we were also looking at Google earnings last night. Google came out, didn't drop a Baby Ruth in the punch bowl, and had a nice, probably the biggest pop out of the bunch. relatively. It's up just over 6%. And again, when we were looking at most of the stocks out there last night or during the show yesterday, the options were saying that there was a 6% move indicated by the options to the upside. Pretty much they all came in line on that. And we got a little follow through with Apple. 509.40 is the last tick on it, up about 1%. Probably not uncommon for a few people to go ahead and flinch if they've been short the stock. It is up again above that 505 area, so you pretty much below 505, a week above 505, probably a little tough. Do I expect them to come out with bad numbers? No. The reaction to the numbers are going to tell us all about it. Has this gone from a growth stock to a value stock? And are certain funds going to get out of it? I think a lot of them have that were in the growth side of it. They're now looking at the value side of this company with, $110, $120 billion in cash. Continues to be a cash machine, but with falling gross margins is generally the only thing the market actually ever thinks of. Google also with gross margin problems, but not near what everybody thought. They at least leveled out for the earnings from mobile compared to desktop. And in fact, the more and more people that get smartphones, they're making it up a little bit in volume. They've also been able to keep the margins from falling on those mobile searches to a very small extent. Is this thing out of the trading range? It's not. We'll take a look at the chart in a little bit. Probably still the strongest of all the tech stocks, and it's been so since the summer. I think Steve Rhodes asked me which one I would rather have. I wouldn't have bought any of them, but Google was probably and still is the best known and understood, and I think that's easy. Everybody knows they sell an ad, they get paid so much for the ad, and they're in the advertising business. It gets very muddy when you start looking at companies like Amazon trading at, depending on what numbers you use, anywhere from 250 to 2,500 PEs, because of the way that they're growing and spending all their money putting it back into the company. When you look at Google, fairly easy company to understand, and I think a lot of big fund holders are in this because they think they'll be able to figure out what's going on in Google. Of course, a retest at the top in Google is going to be your next signal on it. We're awful close to doing something like that. We'll look at the chart in a minute. Other stocks moving. Intel's off about 4%, or excuse me, 4 cents. You're not seeing a lot of sideways action into the traditional tech stocks today, but we will keep an eye on these things. We'll be back and start talking about Coach a little bit, Cree, Intuitive Surgical, and just my impressions on it before we get in the charts.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we're going through the markets here, I wanted to just catch up with them because we are kind of watching to see what happens out here today. But what do we have going on? Market's kind of flat. S&P's up 1.5 points right now. Volume's 2.5 billion shares. Not what you'd like to see pushing these tops. You'd like probably close to 5 billion shares at the end of the day. And, you know, we've been doing 4.2 on huge days. The volume has been rather light the last few days. If we do get a positive result on Apple tomorrow, you're going to look for some kind of breakout in that 5 billion share range or a blow-off top if it basically reverses on you. So keep an eye on that, but volume right now is good but not great, and you're going to need great to get much higher, I think, in this market. But we'll keep an eye on it. We wanted to talk about Coach. It did drop the Chalupa last night in after hours, or actually this morning's earnings, down $9.33, $15. And you can always check out at the CBOE site, even if you're not playing options, if you're looking at playing one of these stocks after hours, you can look at the implied volatility, and if you're quick on the trigger and you like playing after hours and stocks that maybe have some volume, probably a pretty good indication where the downside risk is in the stock. This one actually blew it all out, $9.33. And the belief, I guess, in the market right now is that the other new company that's been an IPO for about a year in the leather goods store. I'm trying to think of it right now. It's I'll think of it in a minute. It is taking most of the business in that market right now. Coors, is that K-O-O-R? Yeah. Is it K-O-R? Michael Kors. C-O-R-S. Symbol is C-O-R-S for Michael Kors. And the belief is that that he's getting most of the business, actually up 1%. Why its direct competitor Coach is down 15% today. Kind of interesting, and a lot of times brand loyalties shift. Remember, everybody used to be wearing members-only jackets, and that, of course, all things like that pass. We can remember real hot products like Crocs that are former shell of themselves. Of course, everybody was wearing Uggs for a while also, but leather goods, briefcases, all that other kind of stuff. Looks like the new guy in town is getting a lot of business out on that, but it's not the first time that Coach has disappointed. Cree is another one of the ones that has popped. When you look through the earnings, not such a big deal. Just the massive short interest in some of these companies is just jaw-dropping. I was short this one a little while, several weeks back, and it's been one of these stocks that you don't want to hold through earnings. And it was, let me put it this way, it's up 22%, but about a 25% short interest in this stock. I suspect if there wasn't a lot of short interest, this thing may have bumped maybe $2-3 on earnings. But you have to be very careful going into earnings when these things are a quarter or 30% of short interest. It's very easy, just like IBM, to move a stock. Cree, of course, in the LED business. Look through the earnings, and they're okay, but more of an issue is short interest. In a month from now, we're probably going to have a much better read on just what the interest in Cree is, but it's probably going to take a little while to shag that off. Intuitive Surgical was the last of the earners out there, ISRG. Another one with heavy short interest, ISRG, just bring it up and make sure I've got a current quote up on it. Up 9%. Of course, the maker of a lot of robotic instruments for healthcare. Up $47.47. Very interesting. In fact, what do we have? Oh, we only have a minute here. We're going to get into stocks anyway. But it's, again, a very high short interest market. When you lose like Coach, you get slammed down. When you win a little bit, you do well like Intuitive Surgical. We'll be back in just a minute. Some other interesting international news that I'm keeping an eye on, and then we're going to get right into a lot of these charts of winners and losers, and Apple, and what we're looking at for the next earnings dates out here for coming along in the next couple of days, besides Apple tonight.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
As we come back, just a little news. Apple's in court yet again, settling lawsuits along with Google, Oracle, all the big chieftains, I think Adobe also. They all came together and had a little powwow. We talked about this almost a year ago. It's finally made it to court, but basically they got in a deal and said, we won't poach your employees and you can't poach, you won't poach ours, which basically got to a point where, well, you know, if you're not going to hire my guy, then I don't have to pay him anymore because I know you're not going to hire him. And I know you're not going to come after him. If I fire him, then that probably means you don't want him anyway, which kind of led to a spiral down in at least technical programming and engineering. But they're starting to go through some of the stuff in the courtroom is starting to come out. But basically the ringleader from the testimony the last couple of days basically says that it was Steve Jobs that called around and basically put together a basically a I don't know what you would call it, basically just a restraint of trade from people being able to move from the jobs they wanted to. But kind of interesting. But especially companies out of business already that were threatened, like Palm, have some pretty good records and no axe to grind anymore, and made a lot of its documents public yesterday and the day before. But all these guys that say don't do evil, do evil. But what can you say? Anyway, now we're going to look at some of the stocks out here that are getting ready for earnings. I looked at Apple a little bit earlier. Of course, this thing has not really bounced to really speak of. It's been down and on lighter volume, but nothing that would actually say that we've had any kind of sign of strength off this bottom. Anything below probably 505.75, that November 14th low with 45 million shares, gives some kind of level of support. Unfortunately, you're probably going to have to hold through to find out. My guess is that this thing has about $25 in it, up or down. You're probably looking somewhere around 480 for the first tick if it disappoints, and my guess is somewhere around 535 on the upside for the first tick if the news is good. And a lot of it's going to be just what the future is of this company is. Is it a growth company anymore? Most people don't believe it is, and that's why a lot of the growth funds have gotten out of this, and the precipitative drop from 705 up here at the high. So it's going to be interesting. Altera, another one coming out tonight, ALTR. And what do we have on it? Actually, one kind of very hard to understand. It's done about a 70% retrace of the last major move down. One thing that I dislike, and it's one of the continuing reasons to make me think that we could see lower prices continuing in the semiconductor space. Altera's got a high volume low on October 24th. I expect that to go back and be challenged at $29.59 before this bottom is put in over here. It's continued to have that high volume, but probably an 85% chance that gets retested. Just the point is when. But nice ABC setting up in this down, and if you look at just the standard expansion out on this, let's see if we can get one to pop up here. What is that up there? $38. And we'll go ahead and do it right here. I think the retracement was just a little higher. A, B, and C. And you got, yeah, so in fact I have a pretty good guess out there. 0.699 retracement, so basically 70% retracement, and you might be setting up some kind of Gartley pattern out here over time, but really need to get back and test that October 24th low. FFIV, another one coming out after the bell, probably within minutes. And what do we got on that? There we go. Hang on that. Okay. Another one, pretty much the same kind of pattern, fairly decent retracement. It came down, filled a huge high volume down gap. It's been moving sideways since. I don't expect a lot out of this stock. The networkers were weak for a while. Their bounces have been rather lethargic. Maybe we get a surprise out of this thing. I've had two back-to-back days with some decent volume out here, but not a real good indication of where this thing's going. But I think we're probably on hold probably through the first quarter until we start seeing spending pick up in that sector. Even though Cisco says that business is picking up, I suspect a little bit of stuffing the channel in Cisco's case. Netflix in FLX. A lot of discussions that Icon has been getting, is it Icon? Yeah. Been getting out of this for the last week or so, or at least paring down a lot of what he bought down in the $60 range over the pretty much August, October time frame. Pretty good indication of how he came in. You had a high volume low on September 4th with 12 million shares. You did get that retested, went below it, closed back above it. Yeah, that was your buy signal out there. And you've had some fairly decent moves out here as soon as Icon started pushing the stock. Again, kind of a hard stock to trade because of the fact of the giant operator in the stock. But earnings out after the bell, I suspect that we'll be underwhelmed. and probably not go very far with the stock. But again, not great stuff in there. Raymond James, another company, of course, the let me find it here. The financial broker dealer out there, RFJ, give us a little bit better look of how the market's actually working. RFJ. How about RJF? If I could type. Now this one been one of the stronger stocks out here. Nice big ABC up. Probably coming awful close to actually. Yep, it's pretty close to finishing a 1-to-1 ABC up. If you had good news on this, your upside's pretty much limited. Even a 1618 expansion of the last big leg would take you up to $50.91. $7-8, pretty good up there. But volume has been light the last few days, and it's got a nice little gap down here. If it probably doesn't do well, look for it to pull back into the $39 range. But already done its 1-to-1 out here. And what I dislike is that the energy from the 26th of July low to this high has not been all that big. There have only been a few big days of volume, and those were that heaviest volume day was the July 26th low with 2.7 million shares that has not been retested. So I could finish up here and be in a bigger trading range from these high up around $43 down to $31. SanDisk, SNDK, another one reporting after the bell today. SNDK, we'll take a look at that one. This one is another one of the patterns that I like in that it came down on monstrous volume. It still has untested, well, I guess you could say that those were tested. Still has a gap down here that looks like it would want to fill in the $36 range. It did come down with monstrous volume starting on April 4th with 27.5 million shares. That gap has been filled over the last couple of days and started to pull back. One of the better bets out here. I would have liked to seen the energy dry up in this last leg. It did a little bit, but not enough, which makes me think that you might have a little bit more room. And a lot of these stocks have been testing the absolute top of these gaps down before they roll over. But probably not a lot of room for this thing to run. If it does have good news, you maybe will have a couple of bucks to the upside in here, unless you get some kind of blowout. And there's absolutely nothing in this sector that says that memory is that catching that much of a price. I would be very skeptical of any higher ranges than $51, and again back into that $36 range. If you want to give me a call, you always can. 877-927-6648. That's 877-927-6648. We would like to. The last one after the bell is Stryker, SYK. And when we look at this, of course, very much like Intuitive Surgical, they make hip and joint replacements. This one's been going up. Had some decent volume as much as 2 days ago in trading, where it was up on 3.6 million shares, trying to get back up where it basically got destroyed in 2011. It's made it past kind of a little shoulder that was June 7th, 2011. And in those volumes, pretty good days in this 3.6 million share range. You could look at a retest of the high, especially with Intuitive Surgical. I suspect a lot of people are going to be pushing this after the bell, but rather limited. $64.61 is your last test of the high. You need more than 4 million shares. So, with everybody's driving these stocks literally as hard as they can in after-hours trading, we can continue to take a look at it. Some of the stocks we wanted to take a look at that we had been following, First one that I wanted to talk about was, what was it now? Fossil, F-O-S-L. One of the ones that's weak on the news today. This one had basically come up, made a few dojis, making a few more. This one's actually making some fairly decent signals. This is the one I think is probably a fairly decent short on the equity side. I think there are better equity shorts. I would have loved to find basically a short in this, but the options are just too expensive, which makes you think that they are probably right. This thing looks very much like it's coming back down into the probably that gap in the high 70, 78 range, something like that, 78, 79. It came down on, or came up and broke out on heavy volume on monstrous short interest. I think we've had a lot of time for that short interest to bleed off, and 3 or 4 dojis out here if you're long, you got to be really thinking about what you're doing out here on this one. Fossil, of course, kind of the last watchmaker on the low end with companies like Timex and the rest, and most individuals on probably younger than 25 no longer wear a watch. They have their smartphone or even just a regular phone that has a clock in it. No reason to put on a watch anymore. So I used to wear one for a long time, but just not the inherent need anymore for it. But one of the better looking charts out here in the market. Somebody in the den, I think, shorted Fossil, and I think you got a good target out here if this thing fails. Of $78 is where I'd be looking if this thing actually came apart. But I was looking at the options. They seemed awful expensive out here. Probably in this one would have favored shorting the actual equity on this thing, but we will find out. I'm just trying to find out when they have their next earnings out here. What is it? Why can't I find it? Probably because I'm sitting 5 feet away back from a monitor. February 12th. So we'll see here. Fossil, February 12th. And we'll look before market open on February 12th. So I have to keep an eye on that. Unfortunately, probably going to be a great deal on this one on how Apple reacts after the bell, and maybe some of the other ones tonight. But I suspect that the tone for the rest of earnings will be set by Apple tonight on whether or not we can break out above that 1,500 level on the S&P cash. My guess is that with so many stocks that I'm following that look as if they've done some blow-off tops here, we could look at some severe retracements. I've also been going after stocks that have done 3 gap up plays, and there are a few of those out there in the market also. Let's see, what do we have? Got about 30 seconds. Just wanted to check back in and see how the market was doing. Up 3 points still. 2.66 billion shares. So we've had, 30-40 minutes to add 160 million shares. Not a lot of movement out here. Getting ready to wait. And, of course, Apple slowly rolling up some shorts out here at 5.12, up 1.5%. We'll be back in just a minute. Again, give me a call, 877-927-6648. We still have time.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And what else we have? You're looking at some stocks out here. We've had some consolidation for a while. I don't want to be down Sally. I guess that'll work. But we've got one stock that actually is kind of interesting to me, although the volume has not worked out so far. But it is what I like in long-term movements to actually make bottoms. And there's not many stocks out there that have really done that. But OpenTable just absolutely slaughtered. But what you want to do, what you do want to see in a stock is something like this. It's not done, I think, with a consolidation, but it is one of the ones I'm tracking on a longer table. But its volume's okay up here at the top. What is missing is a last test of this second low out here with 2.2 million shares, which actually broke through. You can make a claim that maybe this is the November 2nd test of 2011 out here that had 6.8 million shares and broken through both times. So I'd be keeping an eye on this. It's kind of a deal, but if we see volume coming into this an OpenTable breakout, maybe a pullback to that 52 area again on light volume, this is exactly what you look for as a consolidation ending with a breakout on volume, which we haven't had yet. If you look over here on the right side of the chart, you had one big volume day that really didn't do much of anything. It's kind of meandered along up here, which makes me think that that August 2nd low again could get retested. But these are making these kind of long-term consolidations where the stocks get picked up on maybe on the next move down. So there are some things out here that are looking good. I think that after we get through the first quarter and a correction, some of these stocks may look incredibly good. Let's see, what else do we have out here? EOG, for all those natural gas folks out here. I think this is a natural gas stock. This one has been kind of interesting in that we've got a couple of highs out here that it's breaking through. The most recent is February 17, 2012 high, 119.97, but it had 6.1 million shares. What we don't have is a lot of that kind of volume actually coming in. You had 4.2 million shares on the 6th of November, which was kind of a little abandoned baby shooting star, came right back in. It's slowly moved its way up with the market. One thing you haven't had is that sign of strength all the way back from 119 to 127 with nothing. So that's making me think that, if I'm right on this, I think this is a natural gas stock. I've been watching this one, but it's another one out here that you may be watching for some of these blow-off tops or just actual reversal signals. What I dislike is the first leg had lots of energy up to 119, a nice pullback, a very shallow pullback, and then a nice big run up here, but this run has had very light energy all the way back up and breaking through this tie. EOG, exploration, development, and marketing crude oil and natural gas primarily in the United States, Trinidad and Tobago. One of the things that may be affecting this up here at this high, my understanding is that this may be one of the stocks hit if the Keystone pipeline does go through, which probably a good 50-50 chance right now that this might see lower prices in the Gulf when that Keystone pipeline gets permitted. My understanding, it's probably not going to take too long to get the rest of that pipeline put in. $8-9 billion worth of infrastructure building, all private, not any government paid for. So it'd be nice if the president approves that. But we'll take a look at that. But keep an eye on it. EOG, maybe weakness out here if that pipeline gets approved over the next 30 days. But certainly up here on light volume. See you tomorrow.